Hello Wolfpack, another trading signal for you guys. I just released about 8 hours ago a CTSI trading signal, Cartesi trading signal. We're up about 15% on that one already, which is great to see. And I'm not saying this one's going to do the same thing because it's a bit of more of a long-term, bit of a more speculative trading signal, but it is a trading signal nevertheless. And this is on Cake, right? Pancakeswap token. And the reason why I'm doing this trading signal, well, fundamentally, it's pretty obvious, right? Pancakeswap is basically the home of, for lack of a better word, the shit coins, right? The coins very, very, very low market cap that people go to Pancakeswap to pick up. It's also got some farming stuff over there as well, and various other things that I don't really care about, frankly, right? I'm doing a trade. I don't really care too much about the fundamentals, but the reason why I am willing to trade Cake, because even as a trader, you have to understand that, you know, projects need to have solid fundamentals regardless, right? Even if you're not going to hold them. And Cake is the perfect target because, well, as euphoria comes back into the market and as, the micro caps start to pick up again, which they will in a peak bull market like we did in May, Pancakeswap, being the platform in which those are required, will pick up, simultaneously. And that's one of the main reasons. But regardless of that, in the very, very, very short term, I do like Pancakeswap Cake because I think we're going to have a breakout pretty shortly here. I don't really see how this consolidation could last any longer. Now, let's get straight into it, all right? So we've got Cake here, and we can see that, well, we've had a pretty big year, right? It came to existence in the market only in late 2020, and hence we've had a pretty big year, especially, as you would expect, peaking out here in May, when the altcoin season, the miniature one we had at the start of the year, peaked out, right? And then it dropped down, obviously, like the rest of the coins. And with the drop of Cake came the fall of the microcaps. And, they're coming back now. They're coming back. Microcaps are coming back, and Cake hasn't moved yet. And that's why I like Cake, right? Because I think it's going to move, essentially. And we can look here, we can see that, well, we're making higher lows technically, but we're kind of just flatlining, aren't we? I mean, really, we're just kind of going sideways for like 2 months now. 2 whole months of just sideways movement, nothing special at all, just sideways. And keep in mind where we're doing this, right? We're doing this at a very, very critical support zone at $16.50. And being clamped against a very critical resistance zone at $23. So between $16 and $23, we've been going sideways for 2 months. That's very unsustainable, and a breakout will be happening shortly, all right, of course. Let me just check something quickly before I continue with the analysis. All right, no worries. I was going to say, this just shows you, and this is just an example completely unrelated to Cake. I wanted to point out here, because I keep getting, people sending me stochastic RSI charts. They're not really relevant, right? Here we had a full peak on the stochastic RSI, and we still moved in an uptrend on Cake. So, and right now we're fully maxed out. We were fully maxed out multiple times. The point of the matter is they're very unreliable, but that's a point for another video. The main reason I want to look at Cake is because we have this sideways continuation. And what we have with this consolidation period is, and supporting it, is the fact that we have, and let's remove some of this, all of our 3 medium-term SMAs clamped into one area, right? They're all between $1 of each other, right? All right, what this represents is that, well, there's nowhere for Cake to go. The price can't actually move very far, and hence it's just kind of bouncing in a very, very, very small range, and eventually that bouncing is going to lead to an explosion. An analogy I like to use is like holding a beach ball under the water. All right, you can hold it down there for a while, but when it inevitably comes up, it's going to come up and it's actually going to jump out of the water a little bit, right? This is a similar thing that happens with consolidation in chartings. Yes, you can consolidate for an extensive period of time, like Cake has done, but when it does break out, it's going to jump. It's going to jump. Maybe not that far, right? But it's going to jump considerably, right? And, the same thing to the downside. If it breaks out to the downside, it's going to jump down to the downside. But I don't think it's going to break out to the downside. If you're bullish on the market, you shouldn't think that either, right? It's very, very, very likely that we'll break to the upside here if the bull market continues as expected, obviously. So we have the SMAs to support the compression. We have the Bollinger Bands, which are tightening heavily, right? They're very, very, very tight right now. And what this means is that, well, again, it's just extra compression. And what you actually usually see when the Bollinger Bands tighten like this, like we saw here in March, we had a tightening, they rounded out, then they tightened up. And when it tightens up, we usually see an explosive move to the upside afterwards, right? So that's a good sign as well. It means that a move can't be too far away. We have also on the VVPR built up massive amounts of historical trading volume in this region, and hence there's so much support down here all the way to 16 USD that it's very unlikely that we'll actually be dropping below 16 USD. Not only do we have support from all the way back in here in February, all the way here in April, we have resistance that's actually acting as support in July. We've held it for 2 straight months. It just seems very unlikely that we'll drop below $16. And what you can actually do is, as a trader, you can set your stop loss, a little bit below $16, so that on the random occasion that we do drop below it, that's probably a signal that Cake's run is coming to an end, or something bad has happened, because I really don't see how we could logically drop below that point, right? With just considering how long we've held it for, and how much support it's actually offered us in the past. But what we can note about Cake as well is that, according to this VVPR, this red line here, which is the point of control, the POC, essentially the red line, the POC, indicates the largest amount of historical trading volume we have on this chart that is visible on the screen right now, and hence that's a major resistance zone if you're below it, and a major support zone if you're above it. And right now we are currently above it, so we have extra support there in the $19.64 region, which is actually exactly where we are right now. We're right on top of that. So realistically, that's a heavy support zone as well. But the more compelling support zone to look at for me personally would be 16 USD, setting a stop loss for below that point. So you can probably cut your losses quite easily. If we drop below 16 USD, you're looking at a 18% loss, and you're looking at an upside of, potentially up to 30-40%. So it's definitely a good trade in terms of risk reward ratio. Now, we don't have any clear pattern, right? I usually have head and shoulders pattern at this current time in the market. We usually have triangles. There's no real clear pattern, but in my personal opinion, that's not really a problem, right? The extensive sideways consolidation is definitely unsustainable. It's very abnormal for it to be happening for too long, but it's not completely, it's not scaring me to the point where, there's something wrong with Cake. No, not like that, right? I still think fundamentally it's sound. I still think technically we're going to be having a breakout. I'd say within the next couple of weeks, I still would have said that a month ago, right? It's been consolidating for a little bit of an abnormal amount of time, but the point is it's still bullish, and we can look at the weekly chart to support that, right? And what we can see on the weekly chart as well is similar to what I just explained on the daily chart, a compression in the Bollinger Bands, right? So like I just explained, we usually see Bollinger Bands widening when it's just normal price action, and then when it compresses, it indicates that there's extensive consolidation. And like I said with the beach ball, you can hold a beach ball under the water, but when it eventually comes up, it's going to come out of the water, and it's also going to bounce, right? It's also going to bounce. So I would expect some sort of volatility in the upcoming move to some extent. As I said, maybe 30 to 40%, but at the end of the day, we're swing traders, so we'll take what we can get. And I just wanted to note that out as well. Also on the weekly chart, it's very kind of abnormal for this to happen on the weekly chart, but it is bullish nevertheless, right? We do have compression on the SMAs in terms of the current price action as well, which you usually only see on daily charts and small time frames, but that just gives you an idea of how long this thing's actually been consolidating, so that's good to see as well. It indicates to us that there's really not much more time it could logically compress for, right? It's got to make a move either up or down very shortly, and we're keeping an eye on it. And what you could do if you're very conservative, you don't want to hop into a trade blind, what you could actually do, let's move this up a little bit, is you could wait for a breakout, right? You don't have to get in right now and then risk the downside. You could wait for a breakout to the upside. Yes, you're minimizing your gains by maybe 5 to 10%. You're buying in 5 to 10% higher, but you're also dramatically lowering the amount of risk you're taking on that trade. So that's another option as well if you want to do that. It's up to you. But the Bitcoin pair, and what we explained in the last video on Cake, it has been a while, it's been about a month, but on the last video on Cake, we did explain that, hey, I think we're up here somewhere, and we said we're going to come down here in this green box before moving to the upside, and that's because Bitcoin was stealing the attention in the market, and we have done that, right? So everything that's happened there has happened as expected, which is good to see. And now, as I also predicted, I said we're going to come down here and then we're going to move to the upside, so we should start moving to the upside this month, preferably. As for when Cake will top out, I'm thinking it will top out with the rest of the altcoins with Ethereum, essentially. And that's my prediction for Ethereum is February the 3rd, right? A lot of people would say January, I'd say February the 3rd, but not with Bitcoin. It's the main point. So with Ethereum, and that's because, well, we've seen that earlier this year. We saw evidence of that, right? It topped out with Ethereum this year, not with Bitcoin at 64K. When Bitcoin was at 64K, we were down here, right? So you can get some pretty compelling evidence just looking at what's happened this year. And also just from a common sense perspective, well, Cake is kind of the I don't know how to explain it, the king of the micro caps, in terms it gives them a space in the market. So, if micro caps are pumping, which they will be towards the very end of the cycle, Cake will probably be pumping as well. So, with that logic, we should be moving upwards here, but the vast majority of our moves should actually come from January. But nevertheless, this is a good short-term swing trade potential in my personal opinion, especially if you're waiting for a breakout. Now, as for end-of-year targets, and we've explained this in previous videos, I'm looking at 109 USD to 110 USD, right, somewhere in that region. And that's simply just an extrapolation of data, right? Bitcoin reached 64K at the same time as Cake reached its all-time high around 48 USD, assuming Bitcoin reaches my price target of 113K by January the 6th, and adding 50% returns for Cake, because Cake usually outperforms Bitcoin by around 50%, we should bring, the price target up to around 109 USD. So that's rough. I don't really have any fractals because it's a very new coin still, but that's where I'm looking at, around that $100 region. And if you wanted to be more conservative, you could even say that take profits around 90 to 95 USD, because you don't want to face this psychological resistance zone. That could be quite harsh at around 100 USD. There's going to be some resistance over there. So that's what we're looking at for Cake. It looks okay. I might wait for a bit of a confirmation because I don't want to wait another 2 months, but I don't think that's going to happen. I think the breakout's going to come very shortly, especially with the current state in the market. So it looks good. Keep an eye on 16 and keep an eye on the current price action as well. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one.